There is one stock that is not sexy to talk about. It doesn't get YouTube all fired up like some viral hype stock. But you know what excites me? Making a fuckload of money. And if I had a package of 30 or 40 stocks that had the same metrics that looked like this, I'd steal from my own mother. Fuck, I'd even mug your mother on her way to church to buy them all day long. And I really kind of mean it. Let me show you why. Now, guys, before I disclose the stock, it's a $19 billion market cap. Enterprise value, $35 billion. It's a lot of debt there. And look at this. Free cash flow, awful. Minus $1.6 billion last year. Last 5 years, minus $400 million. Return on invested capital, terrible. PE, 41. Margin, 1.7% last year, minus 0.61. Now you're probably like, what is this guy smoking? These numbers are all terrible. It gets worse. Let me show you the 8 pillars. Look at these 8 pillars. We have one check mark. Revenue is up. The rest, all terrible. You might be wondering, what is going on here, Paul? Are you trying to like scam us here? No. This stock, I believe, has the most potential in my portfolio. Now remember, just because it has a lot of potential doesn't mean it's going to be a home run. But I think it has proper margin of safety. And like I said in the intro, if I had 30 or 40 companies that had this potential going down the road, I would love it and I would do anything possible to invest in those. And I guarantee with 30 or 40 companies that looked like this, I would be able to vastly outperform the market. The question is, will this be one that does very well? So what's the bull case in this company? Well, first off, the company is Southwest Airlines. Now, they just turned a solid report card, $27.5 billion in revenue for 2024, which is up 5.5% from last year. Net income, not very much, $465 million, with $261 million of that in the fourth quarter alone. Now, in an inflationary world where airlines usually struggle with fuel costs, that's impressive, and that's where Southwest shines. They're the best at managing their fuel costs. And check this out. They have over $10 billion in liquidity against $6.7 billion in debt. That's a balance sheet that anybody would be happy with. Now let's talk efficiency. Point-to-point model keeps costs down, and they're adding premium seating without ditching their cost advantage. Plus, they have 300 Boeing 737 MAXs on order, which means better fuel efficiency, which means higher margin. And margin is the big thing. More on that shortly. Now, in the first quarter of this year, they're announcing a $750 million buyback and an 18-cent dividend. But here's what's even more impressive. They plan to repurchase $2.25 billion of stock this year. Guys, that's 20%, over 20, actually that's 23% to 24% of the company's shares. Now you might sit there and say, well, what's the big deal? Let me show you the math here. Let's say this company makes $3 billion in a stabilized year. And let's say they have 1 billion shares outstanding. Hypothetically, I don't know the exact number. Right now, that means they're making $3 per share, right? $3 billion divided by 1 billion shares. Okay. Now, let's say they buy back 25% of the company. They are now going from 1 billion shares to 750 million shares. That $3 billion in profit is now divided by 750 million shares, which is $4 per share. If this company is worth 20 times, it's $60 a share here, and here now it's $80 a share. They did nothing to their profit. All they did was buy back shares. The key here is buying back cheap shares, and the people at Southwest know their shares are cheap. They're reinvesting while returning capital, which is a recipe for long-term value. If Wall Street is sleeping on Southwest's future profitability, that's a chance for disciplined investors to take a better look. Now, what's the bear case? Guys, first off, you know what the big bear case is? It's a fucking airline, and they're terrible businesses overall. But before COVID, Southwest was the best run airline, never had a bankruptcy, never had a year that was not profitable, and they were the best in terms of hedging their fuel costs. Now, they're the one airline with contracts in place with all their unions. But if they're not able to increase those rates for that, they could end up seeing a shrink on their margins, which could be a problem for them. They also have problems when it comes to their computer system, which we've seen. They're starting to change those as they go along. Another thing, they're attached to Boeing. Southwest is waiting on 300 MAX 7s, but if certification drags, capacity tightens, maintenance costs rises, and Delta United will scoop up that market share. That's a real threat, especially when your entire fleet depends on one manufacturer. and that manufacturer is currently going through problems. Execution risk. Guys, they're changing how they're doing things. They're doing assigned seatings. They're doing red eyes. They're doing premium seatings. It's a big shift from their 50-year plus method of doing business. If they alienate loyal customers or botch operations, that could be trouble. But remember, that's the reason why the stock is selling for a lot lower than its history. Guys, look at this. Let me break down these numbers for you to go back to it. Let's go to the income statement. Going back before COVID, this company did $22 billion in revenue. Call it 21 on average. And their profit for those years, look at that. 2.3, 2.4, 3.36. That's $8 billion on $60 billion of revenue. That's well over 10% profit margin. And you saw their profit margin recently was in the low single digits. So I believe this is a play of getting back to normal margins. And a lot of people would sit there and say, well, Paul, that's not going to happen. Why not? Margins mean revert. We've seen that in other airlines in the past. I think there's a lot of potential there for that. So let's see what the analysts are saying about this company. Do they agree with me? Well, they have $1.65 here in profit this year, growing to $4.65. That's 3x in the next 3 years. 465 times 20 times multiple takes this to a $93 stock. That's currently selling at $31. That's 3x, guys, in the next 3 years, if this all plays out. And here's their revenue. Not very much growth, but growing nonetheless, with a random dip by the two analysts here. Are they right? I have no idea. But the point is, I look at this as the juice is well worth the squeeze. Now, we have a story. We have some numbers. We got to put it together. That's why we have the stock analyzer tool. This stock analyzer tool has been used over 1 million times in our community because of that exact reason. It allows us to pair together the news, the story, and the numbers. Because remember, a great story at the wrong price becomes a bad investment. I think the story is there for this. I think the margin of safety is pretty solid here. So let's go see what my last assumptions were for Southwest. And of course, I'm going to pick some pretty reasonable ones. Revenue growth, 2%, 4%, and 6% a year for the next 10 years. Very reasonable. This is just basically them not taking market share, just coming along with inflation. Profit margin, 8, 12, and 16%. Guys, they did upwards of 15 some years, but I'm just going to go 8, 12, and 16. PE, it's an airline, which is problematic, but it's a good airline, apart from the last few years. So I still put 15, 18, and 21. By all means, guys, if you don't agree with this multiple, put your own multiple in. That's what's so beautiful about the software. And finally, 9% desired return. Remember, this is not my margin of safety. This is the market return. This means this is my intrinsic value, 9 or 10%. You got to put a higher margin of safety in here by increasing the desired return, because a higher margin of safety is needed because the future is unknown and we're humans and we make mistakes. Now, guys, you're watching this video for ideas. That's the main reason this channel exists. We're here to teach people how to fish. The last people we want here are the ones who sit there and say, oh, Southwest, I'm going to go buy it now. No. We're here to teach a process. This entire video is about teaching my thought process. You might not agree with all of it. That's wonderful. Guys, we have thousands of people in our community here, and they don't agree with me on everything. Hell, there's people in there who love Tesla and Bitcoin. I clearly don't. But they're free thinkers, and their idea is having different opinions and being able to discuss them. And one of the best things is, I love when people share stock analyzer tool. That's very commonly done because people get feedback on their analysis. It's one of the best things I do. We'll bring users on and sit there and say, hey, give us your assumptions, because we want to see how their assumptions are derived. So if you're looking to become a more independent thinker, someone who's learning how to fish so that you can go apply those to your own investing ideas, this is the community for you. And all of these tools and getting more tools are going to make it even easier to help you sleep better at night, make better decisions. Imagine if you're just able to increase your returns by 1% per year. You're talking about hundreds of thousands of dollars, maybe even millions at retirement. So click the link in the description below or go to everythingmoney.com/signup. Sign up, test it out. We have a 7-day trial. It's absolutely freaking awesome. Let's see what Southwest is worth to us. Guys, look at this. Low price of 48, high price of 160, middle price of 95. Look at this discounted cash flow rate, 28.5% potential return based on today's price. Even if I'm wrong, even if I'm off, let's go up here and do worse numbers. Let's do margins of 4, 8, and 12%. They're not able to get back to history. And let's say 12, 14, and 16 times earnings. I still have a potential 18% return. That's investing. That's my goal here. So guys, want to go even crazier? I picked 7 stocks that I think will beat the market, my own personal magnificent 7. So if you're serious about finding value in this market, you have to watch this video. I just picked those 7 stocks, and no, they're not the hype stocks everyone else is chasing. These are companies with real fundamentals, strong balance sheets, and the kind of long-term upside that gets value investors excited. So go check that out, learn why they have massive upside, and avoid the overpriced junk out there. Click on the next video on the screen. Thank you for your time.